Let's get started learning about Forex momentum. Now, momentum is a word that we hear used in everyday life. We're often told that a sports team or a political candidate have a lot of momentum. In this context, the speaker usually means to imply that the team or the candidate has had a lot of recent success and that it would be difficult for an opponent to change their trajectory. Momentum is the quantity of motion of a moving body. In a basic sense, the more momentum a moving object has, the harder it is to stop it. Therefore, you can see the term used metaphorically, like in examples of sports teams. It means that the team is on a roll and it's becoming a stronger team for it. And the other teams will have a harder time stopping the team gaining momentum. Now, many Forex traders, especially new traders, can feel lost and confused in the markets. They feel that they can make money, but they find it hard to achieve this with any kind of consistency. Some end up saying the market is random, but this is just an excuse. The market certainly is random, but there are periods when it is non-random. Now, this is my philosophy, and it is that the markets are continuously and always random. They're made up of human beings who are making decisions randomly around the globe. Because if anybody could make the same decision, everybody would be buying and nobody would be selling. But there are certain times that the market does exhibit non-random behavior. When we can see these times that there is non-random movement, we can make educated, intelligent trading decisions. Now, one of the key tenets of technical analysis is that price frequently lies, but momentum generally speaks the truth. Now, if you keep in mind that an object moving with speed or momentum is difficult to stop. So if you think that the price of an asset is moving with that speed or momentum, it is difficult to change the trajectory. And what do we call these? We call these uptrends and downtrends. Now, first, we need to look at why momentum is so important to trading. A good way to understand the significance of momentum is to step outside of the financial markets altogether and look at an asset class that has been experiencing rising prices for a very long time. So let's look at the housing market. Housing prices are measured in two ways: month-over-month increases and year-over-year increases. If house prices in New York were higher in November than October, then we could safely conclude that the demand for housing remains firm and further increases will be likely. However, if the prices in November suddenly decline from the prices paid in October, especially after relentlessly rising for more than a year, then this might provide us the first clue in a possible change of trend. In real estate, month-over-month figures provide a measure of the rate of change, which is what the study of momentum is all about. Like their counterpart in the real estate markets, professionals in the financial markets keep a close eye on momentum than they do, or keep a closer eye on momentum than they do on certain other aspects of price movement. So we need to understand momentum. Now, there are three terms that we talk about when we mention momentum, and traders seem to mix these up. We have actually maybe four terms. We have momentum. That's the speed or rate of change, or how fast an asset is moving in a direction. So if an asset is trending up, we also want to rate that speed of that trend, because when we see the speed of that trend, even though the asset is continuing up, we can see it lose momentum. But that is momentum trading. We also have momentum indicators. Momentum indicators are individual technical indicators that will show us a change in the trend. But then we have an indicator, a tool that's called a momentum indicator. It is a separate freestanding entity. It's a momentum indicator. And then we have momentum trading strategies. Now, all four of these things are interrelated because they're all based on momentum or the speed of an asset. But the terms aren't interchangeable. And a lot of times somebody will be talking about the momentum indicator and people will mix it up with other indicators, or they'll be talking about MACD and the momentum in the market, and they'll think it's the momentum indicator. Okay, so let's first explain momentum. Now, I can do this in a roundabout fashion. I can do it in a little boring way, but a friend of mine, Mark, does a really good job at explaining momentum because he gets his whole little thing going, and he actually stirs up momentum. So I recorded his little class. It's only a minute or two long, and I want to share it with you. But this will explain to you, get you to understand what momentum is in the markets, not what a momentum indicator is, not what a momentum trading strategy, but understanding the concept of momentum. So I'm going to share this with you, and then we'll go on and talk about momentum indicators.
Biggest pitfalls we've got to avoid. Okay, so the law of momentum basically says that an object in motion will continue in that motion until you get an equal force in the opposite direction. I probably absolutely butchered that, but you get the idea, you know the whole point of it, right? So that is what we're defining as momentum. The idea being is that, if a stock's in an uptrend, the theory is it's going to continue in that uptrend. More likely is it's going to continue in the uptrend than it is to reverse. And that makes sense. That's logical. Same with a downtrend. So the point of momentum trading is what we're looking for is we're looking for momentum, and we're looking to jump on that momentum and let it carry us, forward, long if we're long, down, short if we're short. That's exactly what we're looking to do. So what are the pitfalls and, what are we looking for with momentum? So first of all, we're defining momentum as literally, an exaggerated movement in one direction. Now, I'd be, some people will define it differently and say, well, it's just an uptrend. Some people will define it and say, well, it's just, a steady move up. Whilst I accept there's some momentum there, if something's trending quite nicely, even if it's slow, shallow trend, there is momentum. Really, for me, momentum trading is, hey, there's a good amount of move coming in this. I'm expecting it to continue. How can I get involved in it? So first of all, you're kind of looking to say, is it true momentum? Because listen, honestly, this is the sort of thing that I know I've made the mistake many times before, is you're trading a momentum strategy and you'll jump on board stuff that is not momentum. It's just noise. It's just a little burst of volatility and you end up buying at highs or selling at lows or whatever. So you've got to be sure that this thing is momentum. So you've got to be sure it's true momentum. So you've got to give it some time to kind of work out. You've got to look at volume. You've got to look at distance. If you're swing trading, it's like how far has it moved in a week or in a month? Or is there volume there? What's the catalyst for it? Is there a reason why people are coming? Great data, bad data, all this kind of stuff gives you an idea, and you can say, yeah, you know what? There's some true momentum here. It's not just a price spike from nothing. It's genuine momentum here. So number two is trying to find my entry point. Now, obviously, the danger you have is if it's real true momentum, you're not going to find many pullbacks. An example would be, let's say we have, I don't know, some sort of, news that comes out that eventually filters over the wires that's very, very bullish for the market, whatever that may be. Okay, and we see momentum, the price is moving up, moving up, moving up. I'm looking on data on an intraday chart here, it's moving up, and then as it gathers more and more steam, it just starts to really rip to the upside. You're not going to get opportunity to buy a pullback. So you've got to make the choice. You kind of say, okay, I need to make sure that it's true momentum first before I dive on it, because by the nature of it, I'm probably going to be jumping in at highs. Obviously, that's from a day trading perspective. If you're swing trading, you kind of still have that thing. And if you look at some of the kind of charts that have got a lot of momentum in the past few years, you'll see they really, again, they didn't give anyone a chance to get in. So you've kind of got to make the decision. Do I jump on it? If I jump on it early, I'm going to have to definitely chase, but I'm not going to be as sure that it's momentum, and I may risk getting stopped out.
So as you can see, my buddy there, Mark, is full of momentum. He just gets you all excited, running up and down those charts and gets you into that market, running up and running down. But it gets you the feeling of momentum. Okay. But the biggest problem is you can get excited like Mark and jump in the markets incorrectly. So momentum is obvious, but finding out that you have real momentum as opposed to just a push up or a steady uptrend is a tough decision. Now, let's talk about momentum trading. Now, what is so useful about momentum indicators? Okay. They're useful for resolving the following kinds of common trader dilemmas, like support and resistance. A currency pair has, say, broken past a prior support or resistance point and is making new historic highs or lows. So there aren't any support or resistance levels to tell you if it's a good time to enter or exit a position. Remember when the euro was at 114 going 111, 108, 107, 106? Well, that was a lot of momentum downwards. You needed something to help you because it hadn't been at that level so low in so many years, and there really wasn't any constructive support or resistance points. Or when gold is selling back over 1700, or when Bitcoin made its aggressive move up to 19,000. Okay. Even when it comes back down and is trading at 10 and going back up to 11 or 12, there's very few real support levels because it's only been at those levels a few times ever. So momentum indicators can help you see that. So you missed entering a position early in a trend that that's been going on for a while. So you see an uptrend. Okay, you're not going to sit back and say, well, you know what, I missed my chance at the beginning of the uptrend to get in. So the question is, how can you still find time to ride that trend? How can you reduce or eliminate the risk that you're not buying at the top and selling at the bottom? Because you know what? When a price goes up, how do you know it's at the top? Because you know all those people that need to sell need you to buy. And you don't want to be the one getting suckered in to be the buyer when it's already for a pullback. And you could wait for a pullback. But by waiting, you risk missing even more of the move. You're in a winning trade and you want to ride it for all it's worth, but you don't want to risk staying in too long and losing some of your gains. Or you're approaching resistance and your planned exit point. Do you take profits? Do you leave some of the position in hopes of letting profits run with a trailing stop? What do you do? How do you analyze it? Well, we have momentum indicators. Now, if you understand momentum, if you just think of shooting a rocket into the sky, fireworks, 4th of July in the US, we're shooting a firework up in the sky. You know it's eventually going to fall back down to earth. If you can watch it climb, 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 as you can see that climb slowly ease back down, we can judge that it is losing its momentum, not that it's falling over and returning to earth. An asset will tend to lose momentum before it turns back down. If you can find when that asset is losing that momentum, you can make very competent trading decisions. Now, there's no saying that rocket going up and it starts to lose momentum, that it doesn't hit a warm area gust that allows it to continue up farther, or some wind doesn't come along and carry it up farther. Okay, but the rocket itself or the asset pair has lost its momentum. It's lost its speed. Now, momentum indicators, they can give us a better idea of future price movement because they show whether a trend is strengthening or weakening. They can tell you if an asset is overbought or oversold relative to the price range over a given period of time. They help us decide whether the trend is more likely to continue or reverse direction. Knowing these can help you forecast changes and be more profitable. In short, momentum trading with momentum indicators can give you additional clues to put the odds of being correct even more in your favor. And that's all we want. We want high probability trades. We want to move those odds in our favor, or we want to filter out all of those bad or possibly bad trades. Now, there are many momentum indicators out there. We have Bollinger Bands. We have moving averages and moving average crossovers. We have MACD. We have relative strength index. We have stochastics. All of these will tell us overbought and oversold situations. They all fall under the area of momentum indicators. But this is where I mentioned earlier that people get confused. Okay. Now, momentum indicators, how do they work? As their name suggests, momentum indicators focus on the rate of price change. While the exact mathematical calculations emphasis vary among the indicators, they all attempt to provide a certain perspective, whether price is changing at a faster or slower pace. Hence, the rocket going in the sky, is it still accelerating at the same pace or has it slowed down, not turned backwards? Whether that changing rate indicates trend strength or weakness. A steady increase in the speed at which price is rising or falling suggests trend strength. However, too rapid of an acceleration is often interpreted as a sign of trend exhaustion or a blow off top that suggests a final dramatic surge in optimism that drains out the remaining buyers and sets up for the end of the trend and coming trend reversal. Now, MACD shows us this in a very easy format. Okay, it shows us with the MACD histogram. And we can see the rate of change in the MACD. Let's go on one other thing and we'll come back to the MACD. The momentum indicator is a common tool used for determining the momentum of a particular asset. Now, the reason I didn't go back to MACD first and come, because I have this one set up on the charts and I'm going to show it to you in a second. So we're talking about now, not the range of indicators that are momentum indicators, but the actual tool itself that's called the momentum indicator. The momentum indicator identifies when the price is moving upward or downward and how strongly. Momentum measures the rate of change in prices as opposed to the actual price changes themselves. The momentum indicator is measured by continually taking price differences of a fixed time period. For example, to create a 10-day period momentum line, you would subtract the closing price of the last 10 days ago from the most recent closing price. It compares where the current price is in relation to where the price was in the past. The result is then plotted around the zero line. If the current price is higher than the price in the past, then the momentum indicator is positive here. Let's show it to you on a chart. And I also have this in a little demonstration. But down below here, I've placed the momentum indicator on our charts. Now we're using a 10-day or 10 period close. We're on a 30-minute chart, so we're using going back the last 10, 30 minutes. We can see it's based on the zero line right here, and positive momentum, negative momentum. Actually, let me just hold on a second. I want to darken this so you can see it a little better. Let's make it bright orange so you can, okay. So, and let's see if we can put a straight line on here. So that is the zero indicator there, or as close as I can get it. And we have the momentum indicator. When we have the momentum over the zero line moving upward, it tells us we have positive momentum, or we're looking at a movement up. Soaring momentum, price move. Soaring momentum, no price move, because it didn't break above below the zero line. We did see that the momentum or the speed of the rate of change has dropped off entirely here, even though the price remained in a nice steady uptrend. Okay. Here we start losing momentum. Here we break below zero and price moves to a downtrend. I've got this in a little prepared demonstration for you, which I'm going to share with you now. And then we'll come back and we're going to talk about how to incorporate this in your trading and how to build it into your trading strategy. So let me pop this up for you and then we'll be back in a second. And don't forget, this is the momentum indicator. This isn't MACD or any of the other indicators. This is an indicator to itself that's called a momentum indicator.
The momentum indicator is an indicator that calculates the value of price shifts during a specific period of time, often defined as X candles. In this particular case, it is every 14 candles. This is the average shift in price. The tool takes into account that price does tend to increase over time in an uptrend and decrease over time in a downtrend, like many momentum indicators will. The momentum indicator calculates the pair's rate of change, which makes it a leading indicator as opposed to waiting for overbought and oversold conditions. It just simply is showing that the pair is rising in value as defined by closing prices, and as such it will rise as well. There are two different ways to use this indicator. One is a simple centerline crossover, which means that as the line crosses over the center line, and in this case it is 100 that it uses as the center line, price rises above it there, and as you can see it starts a nice uptrend. The other way to use the indicator also is in divergence. And divergence, if you've watched any of the other videos, you know is simply price making, for example, a new high or a new low, but in this case a new high, but the momentum indicator or oscillator or whichever momentum based indicator you're using not following suit. This shows a severe lack of underlying strength in this particular case in an up move, as even though we've made higher prices, it's with less momentum, which could signal less volume. Because of this, it shows that the move may not have the underlying strength, and as you saw this divergence and you saw a couple candles kind of peter out here at the top, you can see that we shot straight down. So the momentum indicator just simply shows us where the momentum is going, and does it based upon something very simple, just higher closing prices for a bullish momentum or lower closing prices for a bearish one.
So we've covered what is momentum. We've covered momentum indicators. We've now looked at the momentum indicator. Now we want to talk about what is momentum trading. Okay, momentum trading is a particular popular approach to Forex and CFD trading. Momentum trading is a strategy that aims to capitalize on the continuance of an existing trend in the market. The momentum investor believes in spotting large price movements. So momentum trading is like breakout trading. You buy only when price is moving in your favor with the hopes of selling at a higher price or in the reverse situation. So what is the best momentum trading strategy? Well, first, the best strategy is one that fits your circumstances and your personality. We get this question often because we are a webinar that everyone goes to for trading strategies. And I wish I could give you a straightforward answer to this question. However, I think you know as well as I do that it's a complicated question. To understand and read charts like a pro, let's follow momentum here a little bit during a trend and reversal. Okay. Now, I do have this in a little presentation for you, but first we're going to go through it before we go look at it. So first, we are in a strong uptrend. So you can see here on the number one, we're in a strong uptrend where prices trended close to the outer band of the Bollinger Band. If you're using Bollinger Band is a great indicator for this. And this is high momentum. This is what we call the high momentum phase. And this is when price is riding the bands. But you don't have to use a Bollinger Band. You can see it in the trend and the movement of the price. Now, then price enters a regular consolidation period here in number 2 after the first trend wave. This is a normal behavior during trends, and in fact, it's healthy. And price usually moves in these wave-like phases. And if you understand AMFANs and Elliott waves and wave cycles, okay, you'll understand this. But if you just simply understand trend, you know price doesn't move in a continuous upward move. So if you think of this in a momentum move, the momentum is pushing it up. Here, whoever's driving that rocket up is just taking a breath. And now they're saying, okay, let's take off again. Okay. So they're gassing up the rocket to go. Then at 3, at the top price, then reverse stronger. Here we saw a strong sequence of 3 bearish candles. So let's get my marker on here again. So 1, okay, consolidation. 2, 3 here. We gas up the rocket, it went up farther. And now here, number 3, it's lost its momentum. Okay. We can verify that this momentum is gone because we have 3 bearish candles in a row. That means the bears are taking control of the market. This is the first time in a long time where price showed such a strong bearish momentum. This is a significant signal that something is changing. And then 4 is where price breaks the previous low and makes a lower low. That tells us the momentum has completely turned. So in other words, rocket moving up, moving up, moving up, moving up, starts to lose momentum, comes back down a wee little bit, gasses itself up, takes off again, and then it hits the top and falls. And it's lost its momentum. And how do we know that? Well, look where it gassed up and look where it broke. Pushed all the way up to here. Came back down, gassed itself up, went up to here. We wouldn't have known that until we saw double tops. No, then it fell back down. But where did it go? Look at the support and resistance level here. Price, this was a resistance level that was able to conquer with no problem at all. First, it resisted, came back down support, bounced off of support, and went right through the resistance. Now it's come down the resistance, gone right through the resistance because there was no momentum left. So here, let me show you an example. So let's show you this in an actual movement format.
Hello and welcome back, and today we will take a look at a very important concept, and we are going to take a look at momentum, how to find momentum. We'll also explore what momentum is and how we can use it in our own trading to find better trades. So first of all, let's get started with momentum, and when we are talking about momentum, we mean basically one of 2 things. Either it is trend strength. So when we look here at this chart, for example, you can see price was in a very nice uptrend here. We almost did not have any bearish bars. It was just green bars here going up. So the momentum was up here, the trend was up, and then here suddenly the momentum faded, as we would call it, which means that this trend is running out of buyers. We are entering a sideways market, and here we don't have any momentum at all. Then when we look at a chart like this, we don't have any momentum in the overall picture. You can see that price is just going up and down, very narrow range, no real trends. But when we look a little bit deeper, we can see that on a micro level there is some type of momentum. So here you can see we do have strong bearish bars here at this area, very nice downtrend in this sideways market. So you can see here momentum does not always mean that price is just going up in one straight line, but even within a range we can find nice momentum here, very strong candles here as well. And so we can find momentum in different areas. here as well to the upside. We did have a very short-term upside momentum, 1, 2, 3, 4, 5, 6 bullish bars here with very little bearish bars in between. So this is also a classic momentum drive, but a little bit of a different way of looking at it. And then here's a nice example how the bullish momentum reversed to a down momentum. And now when we combine our micro momentum knowledge, where we just look at individual candles, how many bullish, how many bearish bars are there, how strong are the candles, and we combine it with our overall trend analysis knowledge, then we can come up with very nice trading scenarios, and we can understand price charts in a much better way. So if we start here, you can see price was in a very nice uptrend. Here we did not have any bearish bars at all, just green bars going up. Then here at this point we did have a consolidation, which is normal after a trend wave. Always or very often does price enter such a sideways market here. It gives the buyers and the sellers some time to make up their mind, will price reverse, will we go up? And so you can see at all the time we stayed above this black line, which is the 20 period moving average from the Bollinger Bands. So you can see as long as price stays above this moving average, we are in an uptrend, especially when we see such nice momentum here during this trending phase. And although you can see here that price did change here a little bit, let me mark that for you. It was the first time that we had more than one consecutive bearish bar. This does show a little bit of a downside momentum, but as long as we stay above the 20 period moving average, there's usually no reason why we should short such a market. So although you can see something is changing here in the market structure and the momentum, we do have more bearish bars here than what we've seen previously here during this uptrend. As long as we stay above this black line, everything is usually still fine, and then price continues to trade higher. Let me get rid of this for now. And here we have another trend wave with more bullish momentum. You can see that here multiple bullish trend waves again, and then here at the top, this is a classic pattern. It is a double or triple top with a few failed breakout attempts, a few candle rejections. This is not enough information to short yet, but you can see what happens afterward. Again, we have two bearish bars here and then followed by this huge momentum bar. So this is a very important microstructure and a momentum shift. Let me mark that so you can see that. This is the strongest bearish bar we have seen all the way during this whole trend wave or this trending phase. So clearly we have something shifting here, especially if this happens after two trend waves. It makes a complete reversal even more likely. At the same time, we are breaking here below this 20 period moving average, which shows that the momentum is shifting here. We struggle a little bit here on the next candle, which is not too bad. Not always do prices or trends completely reverse. Sometimes, especially around the 20 SMA, we do have a little bit of a consolidation, but you can see the momentum quickly picked up again. We had another very strong bearish bar compared to what has happened here, and you cannot find anything that looks similar. So clearly something is changing here. We are moving from a bullish market to a bearish market. We probably also do have some type of horizontal support and resistance area. So depending on how we draw that, you can see previous highs. This acted then as strong support here together with the 20 period moving average. We broke below it. We then came back into this level. We retested it, and then we sold off even more strong. So you can see how we could anticipate such a reversal here. This would then probably be the real signal here. And if you want to learn more, I will put a link in the description.
So, like any style of trading, momentum trading is subject to risks. It's been found to be successful when prices follow on a trend, but on occasion, momentum traders can get caught off guard when trends go into unexpected reversals. Traders should remember that technical analysis bases its projection on the probability of price movements on past price trends. Prices in the market can move in an unforeseen manner at any time due to unexpected news events or fears or changes in sentiment of the market. Now, before I go on, if you notice on your screen, there's an area that says handouts. I've put together two handouts for you. There's nothing you have to register for, nothing you have to pay for, nothing you have to do except click the download button. One is the Momentum Day Trading Strategy Guide. Okay, it gives you an entire momentum strategy, step by step, with charts and examples and explanations, basically covering what we saw in this class. I've also given you the MACD indicator guide handout, which will show you how to use MACD to see momentum and how to judge the momentum by using and looking at the histogram. Because momentum is a key concept that has proven valuable for determining the likelihood of a profitable trade. Measurements of momentum can be used in short-term or long-term, making them useful in all types of trading strategies. Several technical tools are available to reveal the strength of trends and whether a trade on a particular asset may be a good bet. However, traders should be forewarned that momentum projections are customarily calculated using measurements of past price trends. Actual momentum and price can change at any moment based on events that weren't factored into the original calculation. Because of this, it's important to take preventive measures, such as setting stop losses to safeguard against unforeseen price reversals, even the most profitable momentum scenarios, because risk management should always be taken into your consideration. So thank you very much for joining us. If you want to learn more about momentum trading strategies, go to www.alvexo.com and look in their education center. Or if you have any questions, just click on the live chat button on Alvexo, and you'll be able to talk to a financial analyst one-on-one who will answer your questions for you.